This is Commodity Wrap, midweek, and we're talking with Brian Hoops. Brian is president of Midwest Market Solutions. He's on RFD TV 4 mornings every week, and we had the chance to talk earlier this morning, so welcome back, Brian, as we look at the livestock markets. Again, looking at the live cattle futures moving higher, triple-digit gains there. In live, in feeder cattle, we saw triple-digit gains, and if you exclude the February contract for hogs, the hog market was higher, with 104.15 on the June contract, and that's $21 higher than the front month. So a lot of things happening in the livestock market. What jumps out to you?
Yeah, you talked about that hog market. We were down, like you said, in the front month, a little technical correction, but the rest of the months all showing some strength. And, we do normally see a little bit of spread trade this time of year, and we're starting to see some of that. February futures above the index, so it really can't afford to rally too much. Traders are taking advantage of that, I think, and selling that front month after a 4-day rally and buying some of those spring to summer months. We're pushing those summer months into that 103, 104 area like you talked about. Those are some very good price levels, and typically we don't see those that often, but great to see that they're hitting that already. The old adage was you never sell summer futures in the winter, and maybe that's true, but these are some attractive prices. I think if there's any producers out there that need to lay off some risk, maybe these are opportunities, but we just don't see that much anymore. Most of the hogs are now fully integrated. In the cattle market, we're hearing just a little bit of cash trade, some 201 in Kansas, but it's only about 1,800 head. That's about $1 higher than we saw last week, but a lot of the asking prices in that 201 to 205 range in the south, holding out for that higher money. So our midday cutouts were mixed. Just haven't seen much in the way of any until this trade kind of just developed, but it was, again, very small number of head at higher money, looking for additional gains to be reported Thursday into Friday of this week. Okay.
I had a number jotted down here. When we look at live cattle, February contract had a contract high back in 2023 of $199.57. We're not really testing that. We're 70 cents or so away from that. But when you look down at that April contract, $199.70 on the high side settles at $199.32. I think that's a new contract high, isn't it?
Yeah, a lot of these contract months are hitting contract highs, and not only contract highs, but all-time highs. So a lot of the live cattle, a lot of the feeder cattle hitting these all-time highs, and it's very impressive. It's not, it's hard for a producer to look at these price levels and not want to do some hedging or lock in some futures here because of the price levels that we're at. It's very tempting, and from a risk management standpoint, it's a great thing to do. It's hard when you are trying to sell futures and you don't want to get ran over, in a somewhat of a bull market, because we have been moving higher and continue to press higher with a lot of ideas that the cash trade is going to stay strong into at least the second quarter of this year.
And we did see some cash trade already in the week in the South. I had it at 200, pretty light trade though, 200 in the South, 205 in the North. Are we getting any indications on the spread there between the bid and the ask yet? Have you heard anything?
Just that 201 trade that I talked about in Kansas, that would be 1,800 heads, so it's not enough to make the market. But we're picking up the same as you as far as 205 asking prices in the Southern Plains.
All right, so again, some things for us to definitely keep in mind. And before we go, I like to look at outside markets just because you cover so much and you've got an eye on so much that's going on. Are there some outside markets that have your attention?
Well, certainly crude oil has a lot of attention, I think, this time of year. I think, we expected as we started the new year that the seasonal weakness was expected to see an $8 plus rally in the month of January. We thought, certainly with President Trump taking office, that his promise to drill more would increase production, but sanctions against Russia have kind of slowed some of their production, and that's really let this futures market push and rally. And we're very close to challenging the highs from last July. So it's about a 7-month high in crude oil futures. This market's been a real strong bull market. We're seeing a huge move in the stock market yesterday and today. There's still some inflation fears out there, but the last couple of days we've kind of calmed some of those inflation fears, and stock markets moved higher, metals have moved higher, and with that, the dollar has weakened. We're not sharply lower by any means, but we are a little bit softer, and of course, any weakness in the dollar, I think, is going to be helpful as far as our exports go.
All right, Brian, if we want to keep up with you one-on-one, can we do that?
Yes, that. We can follow us on Twitter, Midwest Markets, and at Brian Hoops. You can get latest information there. You can sign up for our newsletters, our YouTube video series, Facebook page, all at our website, MidwestMarketSolutions.com. And then also, if you want to reach me directly, it's 417-501-5132.
He's the president of Midwest Market Solutions, Brian Hoops, and this is Commodity Wrap.